So I think it's safe to say that the biggest stock market headlines of 2021, apart from everything related to the pandemic, were about Alibaba stock and the entire Chinese tech crackdown. But now that things have calmed down, many investors are looking to find higher quality tech stocks that are not only innovating but also trading at reasonable valuations. And now it looks like American investors still can't find comfort in buying some of China's insane high growth tech stocks like Alibaba, JD.com, and Tencent. In this video, I'll be reacting to some of the latest commentary from some of China's biggest skeptics, and at the end, I'll give you guys my thoughts on why I think that these bear arguments against stocks like Alibaba might just be directed at the wrong audience. But before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. We're going to start off with listening to probably the scariest media piece we saw come out about China this year, which was an interview with the multi-billionaire Jeffrey Gundlach. Jeffrey is the founder of an investment firm that mainly invests in fixed income assets and bonds, which has led investors to title Jeffrey as the Bond King. But in his latest interview, he actually provides us some very interesting insights into his opinions on Chinese investments. And as you can probably already see by the title, he definitely has a very bearish outlook for Chinese stocks.
China is uninvestable, in my opinion, at this point. I've never invested in China, long or short.
Why is that?
I don't trust the data. I don't trust the relationship between the United States and China anymore. Mm-hmm. I think that investments in China could be confiscated. I think there's a risk of that. I mean, China's ascendancy has been in lockstep, weirdly, with the deteriorating fiscal condition of the entitlement programs in the United States. I wonder if that's not some causality in there.
Here, Jeff is basically saying that he doesn't trust the Chinese government on how they're going to manage their biggest tech companies. And sure, it makes a lot of sense to have this perspective if you look at the Alibaba and Didi drama of 2021. But if you dig deeper into China's goals as a country, you'd realize that China clearly wants to become a global technological leader. So to be honest, I don't completely agree with Jeff about Chinese regulation making China a completely uninvestable market, because at the end of the day, China's urge to be a leader is going to spur a lot of innovation. But ironically, Jeff's answer to the next question completely sides with this bullish argument.
I kind of think from a true productive economy sense, I think China's economy is bigger than the United States already. It isn't from a GDP calculation because of the way it's calculated. But when it comes to actual productive capacity, I think it's higher. And of course, the Chinese GDP, even by the classical measure, has grown quite a lot relative to the United States and is now getting in the ballpark. And of course, they have much better fiscal situation, shadow banking problems pushed aside. I'm just talking about the savings rate and things like that. So what happens when China continues to build its military, which they clearly have intentions of doing? Their economy gets bigger than the United States economy. Their military gets bigger than the US military. They've got these hypersonic weapons that are far ahead of ours, at least as far as I know. I mean, maybe we have them, but they're not telling us. Mm-hmm. But China apparently is doing well there, and Russia as well. So what happens when you have the largest military and the largest economy? I kind of think you deserve a seat at the table of reserve currency, and that, I think, has been a goal of China for a long time. Mm-hmm. So I almost feel like there's no turning back on some of these things. I feel like the Taiwan Chinese situation is getting near an end game. I think the U.S. dollar reserve currency situation is getting more near an end game. And that's really going to be the game changer. When I say the next bailout is going to be the one that maybe breaks the camel's back, I think it'll take the dollar down.
So here Jeff states that by a production standpoint, he expects China's economy to be much larger than the United States is. And following this, he believes that the US dollar is on the verge of a potential collapse when compared to, say, the Chinese yuan. Now, I'm not going to speculate on whether or not China's currency will become the world's reserve currency, but what Jeff mentions about China's insane economic growth is exactly what is creating a big opportunity for Chinese stocks in the US, in my opinion. And so even though Jeff makes a very bold argument against Chinese stocks and investing in Chinese companies, he also sides to the bullish side by mentioning just how strong the Chinese economy is. But interestingly enough, the media's recent negativity around China doesn't even end here, as Jim Cramer also went on CNBC last week to give us his thoughts on Chinese stocks, and unsurprisingly, he seems to have taken a complete U-turn from the bullish outlook he had given for didi stocks several months ago.
Jim, I follow you on Twitter. I also follow the Investing Club as well. You said that bond king Jeffrey Gundlach, who just had a comment that China is uninvestable, that you agree with him. And I wanted to ask you about that because this morning we learned that Charlie Munger has invested in Alibaba. Obviously, Alibaba's come down in price, but he is making a bet on China. What do you think?
Well, look, there is a sense that the middle class is going to do better in China, so therefore they'll buy more on Alibaba. My problem is that President Xi, there's a really good article, by the way. We've been reading a couple good articles, but just don't. We get the feeling, frankly, that he's a communist, that he's more Maoist than we thought, that he may be the first real totalitarian dictator in a long time, and he's going to be someone who doesn't really care about capitalism. And in that backdrop, I mean, can you imagine a president that feels like that here and then trying to buy stocks? I mean, I just think it's impossible. I think Gundlach's right. It's impossible.
So, but look, Charlie Munger's on the other side. He's clearly saying that Alibaba's got a future and a much brighter future. You think that's just a misguided view?
The stock's down a lot, but and certainly anything can bounce. But yes, I think that the course of history is changing. I think we're trying to avoid a very bad Cold War. I think that President Xi has complete contempt for us, complete contempt for shareholders, and very much contemptuous of rich people whom he thinks threaten his power.
Is there a price, though, at which you would buy into any of these companies? I mean, we're looking at a screen right now.
Do that.
I'm just asking the question. I mean, you can make the argument that at some point the price is low enough that the risk that it continues to go lower is reduced.
I could do that, but that's irresponsible of me to do that. I mean, I can't recommend buying stocks in a communist regime that is a totalitarian dictator who's not just human rights, but is doing much more than that to be able to solidify his power. I think it's irresponsible for me to come out here and say, you know what, at 108, it's fully discounted that the man is a terrorist dictator. I can't. At 97, it doesn't matter that he's killing a lot of people and that he's retraining people and there's concentration camps, and don't worry about it. I'm not going to do that. I'm not going to do that. I can't do it.
So here Jim is basically saying that he can't invest in Chinese stocks solely because China is run by a communist regime. Now, in my opinion, this is a pretty bizarre argument to make because we all know that investing based on facts is much more effective than investing based on emotion. The facts are pretty clear about how fast the Chinese economy is growing and the solid earnings growth behind stocks like Alibaba. And so I think similar to Jeffrey, Jim is mixing up his facts with his emotions. The fact of the matter is that the Chinese consumer is stronger than ever before, and that will begin to translate into growth for some of China's biggest tech companies. And since over the past year or so, investors have already rushed out of so many highly speculative tech stocks in the US, the large piles of cash that is sitting on the sidelines can definitely find its way through to highly profitable stocks like Alibaba. And once interest rates become the topic of the media this year, China fear should also naturally begin to subside, which is why I continue to reiterate that Alibaba stock is a very, very attractive long-term buying opportunity right now. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below your guys' thoughts on what Jim Cramer said and what Jeffrey said. I'd definitely be very interested in hearing your guys' perspectives. But anyways guys, I hope you enjoyed this video and I'll catch you guys in the next one. Take care.